Welcome to the Orderflows Market Review for Wednesday, May 25th, 2016. My name is Michael Valtos. I'm the founder of Orderflows.com. First, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, there were 3 trades I took this morning, in 2 in the S&Ps, 1 in the bonds. 2 were winners, 1 was a loser. I'll just walk you through it. These are the Orderflows Trader software charts. It's a software that runs on NinjaTrader. If you don't have NinjaTrader, you should look into it. Go visit ninjatrader.com. They have a ton of software add-ons that you could use for your trading. And this is the one that I've developed. This morning, this is just about after 9 o'clock. We had made a new high in the S&Ps, and we're seeing very good volume trade here. You see 7,000 being lifted on the offer, 2,000, 5,000, 4,000, 3,000. I got in here at 2087, and I was really looking for a nicer move up rather quick. And it didn't happen. Even though this bar says it closed at 9:04, my entry was earlier in the bar at closer to about 8, just before 9. And like I said, I've seen a lot of buying up here, which is fine. And I was expecting the market to sort of find a level where, some thin volume was going to be occurring. It didn't happen. We just kept running into offer, into offer, into offer, into offer, into offer. I got out a bit prematurely. I got out a half a point at 2087.5. We had traded up to 88. I was really looking for a quick move up to 89.5, which we did, shortly after I got out. But nevertheless, I got out here, and then, then it was proven right. But the reason I got out is because, we kept trading up here, putting in volume, coming off, trading volume, coming back off. At some point, a move is going to end, and there's going to be heavy volume often, at the end of the move. And you could just see as you're going up, again, heavy volume, heavy volume, heavy volume. I just got tired of fighting it, so I took a small profit. Looking back, I was a bit premature. I didn't necessarily trail my stop. If I trailed my stop would be here at 87, and we didn't necessarily come back. But in trading, you have to make those decisions. Do you want to get out, or do you still want to just fight it? What I was looking for was more something along the lines of this bar here, where you just see thin volume, and then you go right up to the profit target. And this volume was a clue to me to get in, but really the real clue, you can't see it now because we put in more volume here, but earlier in this bar we had a nice big fat buying imbalance of over 4,000. Later we put in, after I got in here at 87, we traded a bit here, some volume at 6 3/4. And the buying imbalance went away. But still, I felt it was fairly strong, a very strong reason to get into the trade. I said I was looking for a quick move. Didn't really develop, so I took what I could get out of it, which was half a point. Looking back, I could have got more out of it. Okay, the second trade was in the bonds, and it didn't work out. It was a loss. It was 5-tick loss. What happened is I got short off this Delta scalper. We actually made a swing high here at the we came back up to the opening price for the day. That's this yellow line, and it moved up. We hit the high. We had we had a ratio that I like. I have another ratio of the Delta scalper. I didn't take the trade initially this first time because as soon as this bar finished, we got the buying going right in the opposing direction. Had I taken a trade here, I would have also been stopped out. We traded back right up to this opening price. However, we started coming off again. You see the delta is building up, 94, 800. again, I got the delta scalper kicking off. This bar had a strong negative delta. I just went ahead and got short here at 24. I put my stop in just behind this point of control, which was 28. I put it in at 29. The market rallied back up to 29. Actually got all the way up to 31. Although early it hit 29. Traded like 9 lots, which of which I was 5. Then it came back down to 28 and 27. But then eventually it went back up. This market, we came off again, after stopping out, we came back down to 25 before turning around and going back up. So, that's why you have to have stops in the market. There's going to be times where it just goes against you. You can, have what you think is the best entry, but you don't know after you click buy or sell, if there's going to be somebody there with a big order going in the opposite direction. Really, you got very strong delta, minus 800, minus 900 practically. The market you'd expect to sell off a bit more, not rally, but nevertheless it did, and it stopped me out. But in trading, you have to learn to take your losses. Okay, this last trade was in the on a 10 range chart in the E-minis. The first trade I took in the minis was based on a 5 range. This second chart was on a 10 range. When you're looking at a 10 range chart, obviously you have more data involved. And sometimes the moves you're going to get are, they look stronger. So what we did is we made our high here around 9:30, came off. We have a divergence, which is an equal or new high with a negative delta. Then the next bar, a very strong negative delta, minus 8,000. Together these two are, it's practically minus 10,000, which I'll get to in a minute. This next bar that we're in here, this one at 10:04, which turned up, had a positive delta. However, at one point it was minus 2458, again, which is strong. So you see minus 2,000, minus 8,000, and in this bar you got minus 2,500 at that moment. I threw an offer here at 2089, which is just ahead of this point of control. I was really looking for a pullback towards this point of control, test it, maybe get through it by a couple points, by a couple ticks, and then sell off. And we got back up towards it. My entry was here at 2089. I got filled. I threw in another offer at 90, right up in here. I really felt very strongly about this trade. I'm not advocating just because you have a loss, you increase your size, but this is a 10 range chart. I have a much longer view. I was expecting to hold this. I was really expecting a bigger move down below 84 at a minimum. So what happens is, we do pop up through it. We get back up to, around this point of control here. We get up to this point of control at 90.5. This was another key level to watch. The first level to watch was going to be this point of control. As the market is going to go down, if you think the market's going down, points of control are going to act as your support or resistance. If you think it's going down, it's going to act as your resistance. So we got up to the first one. Okay, we got through it a little bit. So the next one I'm going to watch to hold is this one here at 20.90.50. When you're thinking of support and resistance, it's not always going to be one particular price level. It's going to be a range, especially if you're trying to get in on a pullback. So we got up to this one, and it was encouraging because we stopped just one tick on the other side, only traded 155, and then you see selling come in. You see selling and balance, selling and balance. So I thought, oh, happy days. I'm going to come down. It's going to, the selling is taking over. You got a very strong negative delta. We run into this bar and we just stall out. This bar is trading. It takes over an hour to form, hour and 10 minutes. But you're seeing heavy volume. Again, it's got a negative delta. Sellers are still in control. However, the thing that caused me to get out, I got out here at, I had bids in down here at 84 was the first level that I was looking at. And I got out though at 87 and 87.5 because this bar took a long time to form, and oftentimes when a bar takes a long time to form, you come out of it and the market moves pretty quick in a certain direction, usually in the same direction. However, in this case, we were stalling out. We were putting in some volume here, and the market wasn't going any lower. You have all this extra selling excess, 6,500 negative delta. You got 19,000 trading at 87, 10,000 at 86 3/4. Where's the follow through? We got through it, but then we hit another level at 6.5 and 6 1/4 where there was strong volume. This time, I got into the trade at 10. It's already 2 hours later, and we're still only trading a couple points better. So I just said I better just take what I can. And I got out at 87, 87.5. Now there was, a Fed speaker. I honestly haven't looked into what the Fed speaker said, but the market did react. The market did react to this level here. When we're getting, like I said, if it's going to be support and resistance, these points of controls. If we start spending a lot of time above this point of control, this previous point of control, it's going to have a higher propensity to keep going up, and which it did. I think there was some mitigating factors there. I don't watch the news. I don't follow the news and trade around the news, but I'm aware of when someone from the Fed is speaking. So if I start seeing the market activity pick up in a certain direction, if I'm in a trade, I don't usually like to be trading around it, but this one was already in my favor, and I felt that maybe I could get a little bit of a push. But really the sign that it wasn't working out was we were just starting to trade higher and higher and higher, and you're trading above your previous point of control. If you're trading more volume below it, okay, that's fine. But if you're trading, starting to put in some good volume above the previous point of control, then this one is going to be acting as support. It's not going to be the resistance, because if it was resistance, we would trade up around it and come off. Not going to sit here and start putting a lot of volume above this point of control. But then the market went up, tested the highs, came off a bit, went back up, made new highs, started coming off, and this is already Wednesday night. We did finally get down to my level, but I'm definitely not claiming. It's nice to see that the market did go into my favor, but the market went up here, took out the high. And, initially on this trade, I had to stop in at 2.5, which is actually the high that we got to. But what was interesting about this high is you got up there and you have some very strong volume, 1,500, 1,100. You even see 1,200 sold into the bid. It's not a ratio that I have in terms of a blue number. However, it's 0.71. On the settings that I use for the indicator, I use 0.699 because I want to see a ratio of 0.7 and below. So you could see it in the settings, 0.699. If I had it set at 0.75, yeah, it would show. It's a borderline number. However, what's important, even though it's not a ratio that I like, I do think that this high has a good chance to hold for the next day or two, simply because it's a decent volume up there. Usually, you come into the high, you see 325, 241. I'm talking about the red candles. The green candles, you just power up through the highs. 482, 703. But the number that you see here that occurred in the afternoon, it's 1,500. It's a decent number. This level, the market reacted to it, and we're trading, 10 points off that high right now. So we'll see what today's day will, how it will develop, and if there's going to be a bit more of, I'll say a bit more of a sell-off. That was the extent of the move that I was looking for. Somewhere down to the 84-ish level initially off of this high. The fact that we made this second high here with some decent volume, followed up by some price rejection numbers. These ratios indicating price rejection as well, and the market came right off. So, those were the three trades that I took today. It was kind of a slow day. It started out pretty quick. It really looked like the market was moving pretty freely after the cash opened. We did, from 8:30 up to 9:30. We had a nice move up, a very nice move, especially here at 8:47 up to 9:30. But then after that, that's when it quieted down. And you can see this, like I said, when you see bars taking a long time to form, this bar over an hour, it's a sign of trading occurring at a fair price. You can't say absorption. Absorption would be buyers and sellers being evenly matched. But we're spending a lot of time trading in one bar that people are happy to transact. You see volumes here: 10,000, 13,000, 19,000, 10,000, 15,000, 13,000, 12,000. This area in here, people were happy to transact at that time. This bar's got 170,000, which is very strong for one bar on 10 range chart. If you're looking at a 5 range chart, your chart is going to be flatline going across. It's basically trading in a 2-point range for over an hour. Okay, so thank you for watching this video. To learn more about trading with order flow and the software that I use in this video, be sure to visit my website, www.orderflows.com. Again, the software runs on NinjaTrader. So if you don't have NinjaTrader, you should check it out. I think will help a lot of people in their trading. Send me an email if you have any questions about this video. My email is mike@orderflows.com. It's right up here. So thanks again, and see you on the inside.